All right, folks, good afternoon. We're airborne now on our joint weekly options and primary live trade brief. I had to host the timing research session yesterday, Trader Roundtable, so hopefully all you guys got the link to attend that, and hopefully you got something out of that by watching some other pros in the business and their take on the market. Obviously, I'm a little different than a couple of the folks there. Kingsley, I'll answer your question real quickly here. Quick question. I was setting up a synthetic stock, and I was wondering, do we focus on the zero 0.8 delta? If so, why not a 1 delta, since the overall strategy is to mimic the upside of the equity? Kingsley, the answer is you're confusing two tactics. You got the long call diagonal confused. In a long call diagonal, we're looking at that deep in the money 0.8 delta call. When you're doing synthetic stock, you're looking at selling an at the money put and buying an at the money call. So the second half of that is correct. Synthetic stock is a 1 delta position because it does mimic stock. So does that make sense? Good. Okay. So good, folks. We had a great week last week. We've been having a great time lately. Obviously, really good looking stuff. Somebody posted in the Reddit room about Wynn yesterday. I'm like, hey man, this trade's got forever to work. Because I guess the short strikes were in the money a little bit. Let me say this for like the 90th time. The reason we call these briefs at Top Gun Options is because we talk about in the brief what we're going to do during the life of the trade. And I also say, if you don't hear from me, I'm not doing anything, even if it's at the eject point. Unless you hear I'm ejecting or I'm adjusting, I'm not doing anything. So, I don't want to start off too tactical, but just to answer the question from the Reddit room. So, if you had ejected yesterday with Wynn, I said it's in a range for kind of a reason here. So a little pop out of Wynn yesterday, and it was down 1.5% earlier today. So huge down. It was down to 166 here for a little bit. So you have to really, if your commit criteria or your strategic mindset for this trade change, that's when you potentially adjust or eject. But nothing's changed with Wynn. But let's get strategic, and then we'll talk about some other stuff. President for life, apparently, over President Xi Jinping. Looks like we're getting back to one-man rule over in China, one-man rule over in Russia with what's his face with Putin. It's interesting because this could be bullish or bearish. It could be bullish in the sense that he's going to be responsible for everything. Obviously, if the market takes off, yay, I'm a hero. If the market implodes, I'm an idiot. He also could be, according to some of the reporting I'm reading, he might be a little scared. The dude, he's not super old, super young. He's 64, but it seems like he might be a little worried about some youngins nipping at his heel. So it looks like it's going to be very, very interesting in China with one-man rule. And as we've talked about, I really haven't gone back into FXI as much lately, and there's a reason for that, because for the past couple months, you could be forgiven for mistaking this to look like the S&P 500. Rip your face off January, a little bit of a hesitation here, and then boom, implosion. And we've gotten about 75% of our pullback back. These guys haven't. So this is actually a bearish chart. If you're a chartologist, this is not a bullish chart. So I wouldn't be looking at any new FXI positions. If you get back, there's about half the implosion. If you get half that back and keep going, it's bullish. If you get half of that back and don't, it's bearish. So not really digging that the FXI right now, but interesting news out of China. Warren Buffett did his I'm a folksy rich dude that lives in the same house I bought 100 years ago type. He's your typical limousine liberal here, folks. The new GOP tax law benefits Berkshire and acts as a huge tailwind for businesses. So there it is. The Oracle of Omaha said what I said probably a year and a half ago. So I'm glad to see Warren Buffett's, coming out of the woodwork. Everybody remembers that Barack Hussein Obama kind of used him as his limousine liberal, and my secretary pays more in effective tax rate than me. Okay, that's because you pay yourself $100,000 a year and you get everything for free. Your airplanes go through your company, your security guard, the 8 Diet Cokes a day that you drink. So it's a little disingenuous. And then when it's funny because Obama used him as an example of here's your typical rich white guy who wants to pay more in taxes. What's stopping you? Does everybody remember last week or 2 weeks ago, Bill Gates did the same thing? Like, I think I should pay more in taxes. Do it. Who or what is stopping you from sending a big old check to the U.S. Treasury? It's called hypocrisy and hubris. So, anyway, let's. You know what's cool, Fish? Yeah, Marjorie Stoneman Douglas, the high school. They won the hockey tournament. Yeah, that was national news. That was pretty good. Matthew plays with all those kids. He knows. He knows all those boys. So yeah, it was cool to see them win. Definitely cool. So this was on CNBC yesterday. We laughed last week about the BlackRock saying the market's going up, Morgan Stanley saying the market's going down. Well, Morgan Stanley, this hasn't aged well. Now remember, folks, a broken clock can be right twice a day. If we do this, chop around this, and then maybe one of these 8 months from now, the Morgan Stanley dude can be like, "See, I told you." But we all know that's a load of shit. So BlackRock, I predicted this last week, and guys, we've nailed. Maybe I will change my call sign to Nostradamus. What did I say we're going to do? I said for the next week and a half, we're going to chop around the 50, and then we're going to pop on through it. Literally, we have nailed all of that. And the market's doing exactly what I expected it to do, and we've positioned our trades appropriately. I've been enjoying my Starbucks and my view this morning, watching and listening to the Fed chief. He's a little more hawkish than the Fed, than the Fed minutes last week. I gotta be honest with you. He confirmed. What I said about full employment. Where is it? Right there. I told you Janet said, we're at full employment. We're at 4.1% the last time I looked. The unemployment rate, that's full, folks. Some people just ain't going to work. They don't want to work. They're on welfare. They're in their parents' basement eating Cheetos, and they just don't want to motivate. So we're at full employment. That's a great indicator for the economy. He got drawn into DACA and hey, what would happen if we deport all these people to productivity and all sorts of crap. He dodged that stuff effectively. So, but a little more hawkish than the minutes. The VIX went up a little bit. I don't think it's super. This is a dead cat bounce. Let's take a look at the VIX. As I predicted, here is what's going to happen. Rip your face off. Oh, wait, is it over? No. Is it over really? And that's what's going to happen to volatility. I absolutely believe it. So everything this guy is saying is bullish for the economy. It might not be super bullish for the stock market, and we've all kind of laughed about some of the Wall Street isms with when interest rates are high, stocks will die. This is an even better look at it with VXX. And again, let me get a hell yeah. Well, we'll debrief. If you enjoyed Friday's VXX action, that's why you hold on to these trades, folks. That trade hit max profit. So that's exactly what that's going to do, in my opinion, using my strategic brain. So Friday was a huge hell yeah, and hopefully a lot of lessons learned for people. I said, I'm holding this trade to Friday, man. And volatility got smashed, as I predicted. Volatility was going to come in. Here's a moto statement, master the obvious. Powell says stock market isn't the same as the economy. Duh. But he's obviously talking to congressmen and women who don't even know what a stock market is. So it's comical sometimes that he has to talk to these people like they're in second grade. And many of them obviously have that mentality that they are. We don't manage the stock market, but it, quote, enters into our thinking. So good stuff, but he was, like I said, he's more hawkish than the minutes were last week. And they do this on purpose, folks. They come on. They know that this rip your face off rally was based on their Fed minutes. Once we went through the 50-day here, now he's trying to do what? Put a little bit of a lid on it. Okay, it's you can set your watch to how the Fed operates, and that's a good thing, right? That the market likes somewhat certainty. Not obviously we can't have near certainty. So according to the Fed funds futures rate, I think they went up this morning. I think this is a pretty good trade. There's a 90% probability at the Fed meeting in March that we're going to get a 25 BIP increase. Okay, so that is a good thing. I'm going to keep telling you that rising interest rates are a good thing. It means things are going well, right? We talked about what one of the Fed lieutenants said last week, Bullard. He caused another nice little rip your face off rally last week when he said everything needs to be perfect to get 4 interest rate increases. Okay, so we'll see. We'll see if everything goes perfect. We got remember I briefed yesterday in the timing research session. I said what? I said one of the dudes was like, there's really not that much macro data this week. I'm like, there's a shit pot of macro data coming. This is the busiest macroeconomic data week that I have seen in a long time. And one of the points that we got out today is this. Where is it? Consumer confidence. Consumer confidence is its best since November of 2000. In November of 2000, I was separating from the United States Navy active duty, and in the next month, December, I'm flying Hornets for the Naval Reserve out of Fort Worth. I remember November of 2000 very well. That's how high consumer confidence is right now. That's when people look at their paycheck and go, wow, that's a little extra coin in there, isn't there? But there was a couple brown shoots today as well. Look at the durable goods orders. Okay, it is that's kind of a big tumble. Remember, durable goods is, and if you see the word core, that means X. Like in the durable goods case, it's X transportation items. This isn't necessarily super good news. So I don't mind seeing some brown shoots in this economy, and there's the core durable goods orders. So remember, it's washers, dryers, it's durable goods. So that wasn't necessarily good news today. Oh yeah, we laughed. I was laughing at this yesterday. Goldman's trading desk had its worst year since 2004. Maybe because they predicted Hillary was going to win, and if Trump won, the market would implode. Let's say that was a pretty shitty call and a pretty shitty trade. So, again, don't think you're missing out on anything, whether you're not in a hedge fund or a private wealth management client here at Goldman Sachs. They put their pants on just like we do, and they suck apparently when they're wearing them. We're up. I'm getting ready for, I think we're doing a full throttle, a smaller one, in a little bit. Hold on one second. All right, let me answer that one. Okay. One second. Okay, good. Yeah, there's nothing really. Okay. So you're not missing out being a Goldman client, and you're not missing out on being in a hedge fund. We are up like, what are we, like 42, 44? I haven't had this best. If I go back to like our October run, it's epic. But this is the best start to my year ever, in my trading career. This is pretty damn Everybody should be pretty damn happy. Uh, bu- 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 let's take a look at this. How about this, folks? I wrote this article in October, didn't I? I didn't write this article. I told you about it. I said the Fangs days are over. This was when? October. We beat the financial media by months. Here is where I said I would ditch the Fangs. And we've already laughed at the difference between the chart of Facebook and Amazon. We can get into the current debate of, is Amazon a FANG? It isn't, in my opinion. It's not categorized as a tech stock. It's categorized now as a service company, right? So this is, I'm not going to go into a lot of the reasons, but the answer to this is yes. I would not be in Facebook. I would not be in Apple. I don't know what Netflix is, and Google kind of sucks too. Amazon, 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 period. When you have headlines like this, ladies and gentlemen, look at this headline. Silicon Valley faces make or break moment amid big tech backlash. Look at this headline, ladies and gentlemen. Gone are the glory days of growing praise and good PR for big tech companies. Who told you that? Who told you that 6 months ago? I did. I told you it was over when that piece of shit Tim Cook says, "Oh, we're not going to unlock that terrorist iPhone for privacy concerns." And then, 6 months later, they're all turning over as much data as they can to the government because it hurts Trump. They're awful. So that headline is comical. Look at this headline. This also doesn't help them. You ready for this? Good work if you can get it. Amazon made $5.6 billion. How much do they pay in federal tax? Do you want to know how much my company paid in federal tax? It wasn't zero, folks. How the F does this happen? And I got to tell you, Donald Trump ain't no fan of Jeff Bezos. So with the Republicans still in power, you're going to see a lot of pressure against these fangs, especially this clown. We've laughed at this dude. He is a clown. Hey, he's a quadrillionaire and he founded Facebook. Great. Sometimes it's better to be lucky than good. He's currently a clown and his stock sucks. And he's being sued, and it's awful. So get out. I hope nobody's still in the fangs. There is other places to deploy your capital, especially into the financials. They will have a good 2018 as the Fed raises interest rates. The financials will be the gift that keeps on giving. So. Harry, so Amazon is one tweet away from crashing. Not necessarily. The president's already tweeted about Jeff Bezos and Amazon and the tax breaks. What was it, 2 months ago, he said, I think there should be an internet tax. He sounded like a Democrat. Remember, ladies and gentlemen, Donald Trump was a Democrat for most of his life. He was a New York Democrat. So it's comical. Him proposing an internet tax makes my skin boil. So it's not, it's awesome. Folks, Jan, I think I've answered this several times for you. In 2 of our services, we have over 200 members. We have to be in go to training. In go to webinar. Under 200 members, we are in a go to training room where you can see other people's chats. That's why you can't see the chat. I can. That's why I have to read it. Brad, the greatest code writer in the history of the world hasn't wrote any more code. Exactly. No shit. Benoit, the N in FANG stands for Microsoft. Oh, there you go. Got it. Kevin will talk about the weekly options trade as soon as we get tactical. Anything else I need to cover? I covered yesterday in the timing research brief the rest of the macroeconomic data on the schedule. From crude oil, pending home sales, Chicago PMI. We get preliminary. It's chock full of data here, folks. But I will tell you, we're getting into a little. So why do we think that the market's doing this? Why do we think we have this pop here? So let's debrief. I predicted to the week, I said the first or second week in February, we're going to take a break. And then as we started to take a break, the short vol trade imploded. I said, everybody just chill the hell out. I said, if you are in a Jan 19 or a Jan 20, I would absolutely add to it. And for all my new Full Throttle members, I would add the new Jan 20s if you don't have them. Okay? Orderly sell-off. I told you it was not the big one. It was not the Fred Sanford. It would be a what? BTFD. I said this will be a buy the effing dip moment. I also said, well, obviously there's some probability that we could get pulled down through the 200-day, and then that will be the big one. That will be the Fred Sanford. I said that is not going to happen. I said we are going to get pulled back up to the 50. Then I also said what? We're going to end up trading around the 50-day support, resistance for about a week and a half. It has been officially a week and a half since I predicted that. And now yesterday and a little bit of a follow through today, we have popped through it and recovered about 80% of this pullback. Epic. Cut, print, and you can take that one to the bank. But why, aside from the fundamentals being good and the Fed and quack, 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 why do you think we popped through the 50-day and then had a super pop? Let's everybody put our thinking brains on. Patrick got it. Anybody else? Mark, because he said it would. Man, if I could do that, I'd be the ruler of the universe. No. Why? Patrick got it. Not interest rates. Nope. None of that. You ready for this? It is, Lisa got it. It is short covering. So ladies and gentlemen, as I said, I believed we'd go up to this 50 and kind of hang around, and then there's going to be a next catalyst, either to take us higher or lower. The catalyst to take us higher was dovish Fed minutes. Now, I already told you what he's kind of saying right now, but what happened? What happened right here is a bunch of people. What happened last week, guys? I just briefed you on it. What happened last week? There was a rumble in the jungle between who? There was a rumble in the jungle between the biggest asset manager in the world saying, game on, and Morgan Stanley, my silver medalist, saying, hey, what are you guys, retarded? This pullback was an appetizer and the main course is coming. That's what happened. What is the Jan 20 trade you mentioned? I missed it. David, we have a bunch of Jan 20 trades a couple weeks ago. During the bottom here, I said to get back, if you're a new Full Throttle member, get into all of our Jan 20s. Right? I said that from an Amazon to a Raytheon, all that stuff, MGM, whatever. My list of Jan 20 positions that I've covered. EWZ, which is Brazil. So there wasn't a specific. I've gone through them all. So make sure you go on the member pages and take a look at the replays. And I also said what? To start trading front month spreads, right? So short covering. Somebody just said, "Hey, explain short covering." Here's how this works. Let me give you the political science major naval aviator's answer. This isn't options trading, folks. This is stock. When people short, so right around, you see this right here. See this through the 50 pullback right here? A lot of people, some people I know, got short the market, meaning what? They thought it was going to do what Morgan Stanley said. Who was it? John Thomas yesterday or whoever said, we're going to retest the lows before we head higher. I said, that's not going to happen. There's no way in hell that's going to happen. The fundamental, this was a volatility pullback. It had nothing to do with fundamentals. Nothing. So don't tell me we're going to go retest the lows just because some technical analysis people who can't predict what the right side of a chart is going to look like. So, Patrick, I wanted to short so bad you talked me off the ledge. Oh my God, man. Thank God. So here's what happened, folks, is when you short your broker, when you say, I want to go out and short the S&P 500, I don't think it's going to pop, I think it's going to drop, right? Your broker goes out and borrows shares with you promising that, hey, I'm going to buy these shares back, at a lower price because they're going lower. That's called shorting. But what happens when it starts, the stock or the index that you're shorting starts to go up in price? You immediately start losing money. If you are short something and it starts going up, you're screwed. So the way to close a short position, if you're short this index or short stock, is to do what? You have to buy back the shares. So you ready for this analogy? It's a circular firing squad. So you're short the stock, you're short the S&P 500, and all of a sudden it starts going up. It's like, shit. To cover, it's called short covering. To cover your short, you have to get long. You have to buy the damn index or stock, which makes it do what? Go up. If you're relatively new, maybe I haven't used the term lately. I haven't seen one, or maybe I can do a little research. It's called short covering. So I think this rally that we're seeing through the 50-day it's a little fundamental. I mean, the good stuff going on, but it's also this was a make or break moment, folks. What did I tell you 2 weeks ago? I said the next week and a half is going to be decision time. We're going to have to decide whether or not we are going to head lower or we're going to head higher. And guess what? I just showed you that half the smart money, Morgan Stanley, said we go lower, and the other half says we go higher. And who was right? We were right, actually, because I said it was going higher before BlackRock did. Okay. JW, so the report from Morgan Stanley was enough to cause the rally? No, I don't think. No, folks, there are traders out there that don't even know what Morgan Stanley is. So they were just shorting on their own. But I mean, you heard one or two people on that webinar yesterday say this, folks, right? So that people were looking at it from a technical analysis point of view. I'm not super technical analysis, man. It's something I use, but it makes literally, like John Thomas said yesterday, there are no technical analysis hedge funds, guys. They don't exist because it doesn't work as it. So just real quick, so we can move on and get tactical and look at some trades. And this pop, I think is two things. I think it's fundamental, just because, hey, the computers and the people that man them said, all right, we've gone through the 50-day with some airspeed. It's bullish. But this other half of the pop is also because people were short. People, I just showed you, Morgan Stanley believed dead cat bounce and we head lower. We'll retest this low and maybe head higher. It could not have been more wrong. So if you were a Morgan Stanley private wealth client, you lost a lot of money in the past couple of weeks. If you're a TGO client, you made a lot of money in the past couple of weeks, and that's what I like. Okay. Okay. Sweet. What else do we have to cover before we get tactical and look at some positions? Yeah, exactly, Graham. We're out of that no man's land. I said the market doesn't like to live between these two moving averages, man. These are magnets. Remember, a moving average tends to be a magnet. Okay, so Werner, if 70% of all trades are initiated by automated trading, means software, what's the influence here? Werner, I don't know where you got the 70% number. I don't know if it's that high or that low. Well, you can see the influence. There's the influence right there of automated trading. I mean, that was, and then humans started getting involved down here saying what? This is cheap. We've had a pretty healthy pullback, and now it's, now it's time to get back on our horse. So, anyway, all right, let's go ahead and start covering some trades here. Anyway, Mark, what's the VIX? Well, and again, folks, this is I'm making another prediction. There's the world's going to end. No, it isn't. Oh, it might. Maybe it's we're gonna just like we chopped around the 50-day. We're gonna see little spikes in volatility until vol comes back into. I'd still be selling vol here. Okay, so looking very, very nice as far as volatility. I'm not worried about this little spike today. We had at what was it? At one point yesterday, the Dow was up 400 points on a Monday. It is incredible. Harry, what do you want to talk about? I covered FXI. I said I wouldn't be in. If you're in it, it's a hold. If not, I wouldn't be getting in it. And I specifically haven't talked about RSX in probably 6 months because it's not exciting to me. I did not reinitiate FXI or RSX positions when I had to get out of E-Trade and go over to shit sandwich TradeStation. There's a 6-month chart of RSX. It's dead money. If you're in the RSX or FXI, you need to be selling front month upside calls and spreads to make some coin. Okay. Victor, you don't think Apple will repatriate cash and buy back stock? I absolutely do, Victor. I think, folks, Apple isn't necessarily dead money. It's not like a GE to me. Folks, Apple, look at the 6-month chart of Apple. There's 160 and we're up $19 in 6 months. You know what I'm going to do next, guys? You're going to see this chart. Amazon went from 940 to 1520. Which stock would you rather be in? My point with saying that about Apple, I absolutely, they are repatriating cash. They're paying about $32 billion in taxes on it. They said they're going to create 20,000 jobs. I guarantee you they're going to buy back their stock. Great. I just think I can get better alpha out of an Amazon than I can an Apple. That's what I'm saying. Exactly, Brian. And take a look at a chart of Raytheon over that same time period. 177 to 222. So the FANGs are dead money, guys. They're not going out of business by Jan 20. If you want to be in them, just know that it's going to be a while before they lift off again. I'm telling you, folks, a headline like this was unthinkable. I'm going to read this headline again. Silicon Valley faces make or break moment amid big tech backlash. Gone are the glory days of glowing praise and good PR for big tech companies. They're starting to be seen as evil. I think they're evil. I think this guy's a piece of shit, Mark Zuckerberg. So he's hiring 10,000 speech police or whatever, like to monitor the election. Twitter has been censoring. Some of my tweets get censored. You don't see liberals' tweets censored. Only, did you see the picture of the lady that disabled Trump's Twitter account like 4 or 5 months ago? Google it. I'll leave it at that. So the tech companies ain't doing good anymore, and with Republicans in the House, the Senate, and the White House, they might have a bullseye on their back. I called this in October. There are better places to deploy your capital. That's all I'm getting at, Victor. If you like an Apple or a Facebook and think in a couple of years it's going to be crushing it, it might. I just don't like. I just don't like it. Kevin, yes, Raytheon is a gift that keeps on giving, up 1,660%. Woo. Graham, Apple's a phone company. Basically, when product trouble, sales are falling. You nailed it, man. We covered this last week. Asia, which, whenever they say, oh, U.S. sales are flat, but we own Asia. Not anymore. I don't see too many people in Vietnam running around to buy a $1,000 iPhone. It's just not going to happen. And then if they make it a $300 iPhone, what are the people in the U.S. going to do? It's called an arbitrage. I'd fly in my own airplane over to Vietnam, buy as many $300 iPhones as I could, and sell them in the U.S. That is called arbitrage. So, can you recommend an XLF trade? No, Jim, I can't. I would not be in XLF. I would be in JP Morgan or Morgan Stanley. I stopped trading the XLF a long time ago. Not a big XLF guy. There's no premium in the front month upside calls. So JP Morgan's looking very, very good. Okay, all right, let's get airborne, guys, and get tactical. I sent out a trade alert earlier. I think it was at 75 cents. Here's the weekly options trade. Since we're doing a joint brief, folks, if you're not in the weekly option service and you don't know what weekly options are, they are very, very tactical. I think one day last week we made $1,000 in a day, or it's when they work, they're great. When they don't, we've been doing very, very good with our weekly options trades. So here's it. Well, I'll bring this up. Here's the text alert that I sent out yesterday. So everybody if you're not on the weekly options list, you didn't get this. I didn't send a text to you, obviously, but here's the weekly options trade from yesterday. Selling 30 of the March 2nd, 1497.5 puts, and as a hedge, buying 30 of the 1495 puts. Okay. 75 cents was mid-market yesterday. And let's just take a look at the metrics of the trade here. Right in line with my SOP of not wanting to risk more than $5,000, right around that, 5,300 to potentially make 2,300. 70% probability using at the money volatility. This is called a bull put spread. I'm bullish, or at least neutral, on Amazon. And again, as we covered in our credit spread lesson last week, you want to be the house. Amazon's that blue line. So in this bull put spread, we make money three ways. Amazon goes up, yay. Amazon kind of wallows around, unched on the day equals time decay. Or Amazon can even go down a little bit as long as it stays above the break even. So this is a good looking trade. Let's take a look at the pricing now in case you didn't get filled. I know some of you are might not have been filled on that. Let me close this. Okay, so I sent it out at 75 yesterday, and it's it's bouncing around 68. And now it's at 70. I think I said plus or minus 5 cents. So it's right there. It's right there. Okay. Harry, I covered that last week. Watch one of the recordings. I think the most deployed capital in one of my portfolios is 60, and the minimum's 40. Never 100%. Okay, so this is still a good trade. Yeah, so if you're not in the weekly options trade, and again, folks, warning Will Robinson, if you don't trade weekly options, don't say, hey, this looks like a really cool thing and try it. You should always be paper trading, especially when you're learning how to trade weekly options. It just makes sense. You don't want to get don't want to get blown out. Okay, 1 second. Okay, cool. All right, what else? Let's cover our active primary live trade brief positions. What is the credit, Jan? It's 75 cents, as I said. All right, let's take a look at last week's live trade brief. So last week, folks, we had the 1445. We had a busy brief last week. We had the Amazon 1445, 1442.5. If you had taken that one into the merge, it would have expired for a max profit of $1,900. How'd everybody do in this one? Everybody very happy with that one. That's another winner chicken dinner. Okay. Trade's now at about 60, not 75. If it's outside the range that I gave you yesterday, folks, it's not a trade I would do. Remember? So this was yeah, exactly, Brian. No, I said to close this in a day. I'm just wondering, Ryan took it to max profit. Werner let it expire with full profit. Good. Yeah, no, I'm just taking a little bit of a poll of how many people stayed in it instead of taking the profits. That's great, guys. You remember, you fly and fight your own airplane. Don't get lulled into that sense of safety of, I'm going to let these all expire worthless for max profit, because the nice profits you make are going to be wiped out by that one day when you say, holy crap, it's Friday. Why is this stock down or up, 500 points? So just be careful with that. We've all been there, or we might be able to be there. So John took 70%. Good. Okay. All right. So a lot of happy people with the Amazon trade. Hey, real quick. Over the past couple days, I think Susie's a couple monthly people have upgraded. Make sure. I mean, don't get me wrong. I'm not a charity man. I'd love you to be a monthly member for the next 10 years, but you're losing money. So I'd strongly recommend you guys upgrade to all the monthly folks get their annuals, because I think we have a full throttle launch coming up next week, and the age-old marketing department saying we're underpriced. But we'll see. So upgrading your annual, folks. Iron Condor on ExxonMobil, the 77.5, 78. Remember, folks, one of the important things about an Iron Condor and to know about it is what? They're good until they're not. So there's a reason I picked these strikes, the 77.5, 78. Nice run out of ExxonMobil of late, and a little bit of that's I'm not going to say that's a gap, but that's a pretty good tear. We get crude oil inventory report on Wednesday. This one's a hold for me. Like I said, I usually don't do too much adjusting of my spreads, because I guarantee you, once you see this and you end up rolling it up and out or something like that, ExxonMobil's back down here at 77.5 in a couple of days. This rip your face off rally on a Monday, I don't know if we're going to see super follow through the entire time. So this is a hold. Ray, absolutely. This is whoever asked earlier about the Jan 20s. This is another one. So this is an absolute yes to put on a Jan 20 long call diagonal or synthetic stock. Okay. I have to check. I got to shoot someone a Skype. I think we might not be doing full throttle tonight. We might do it tomorrow night because I might have a conflict. But I think we have, or no, double verticals are up next. Can't wait. And who said that? Kevin? Win. Let me get a hell yeah if you've made, well, in the model portfolio, it's been about $7,500 in profit in win trades in what's that, a month? That Iron Condor went right down the fairway. It expired at max profit. Everybody liked that. If you were new to Iron Condors, isn't that a cool trade? A nice range bound trade that went right through the uprights. And that's not in this portfolio, but yeah, I think we're talking about Iron Condors. What else did we do last week? This JP Morgan Iron Condor. I didn't do it. I didn't even look. How'd the JP, anybody do this one? Where's JP Morgan? What did it do last week? I just saw it rising up with the interest rates. Did it do good? What did it close on Friday? Greg made 35%. Tamara says awesome. Patrick made $2,000. Hell yeah. Look at that, man. Sweet. Very, very nice. Again, I don't like to overload on weekly options trades, so that one that was a free one on me, man. So that was good for you. Awesome. I'm glad people did some good work. All right, let's go back a little bit further from last week. The week before that, on 13 Feb, we did a new JP Morgan trade, the 109-108 out to March 9th. $1,700. This is probably a close right now. So Matthew made $1,500. Patrick Reed almost bit me. That's a great lesson learned, isn't it? So Doug closed at 77%. Good. So you guys are sticking with your SOP. VXX trade, Kingsley, I'll close it. Maybe I'll cover it at the end if we have time, because it's not in this portfolio. Bill closed it for 90%. Wow, very nice. Let's look at the 109-108 out to March 9th on JP Morgan and see how we're doing on this trade. The March 9. Oh, this has got to be 85, 90% profit. Sell the 109. What was it? 109, 108. Jeez, what a good call, man. You think I do this for a living? 109, 108, and that's priced. There is no bid ask. I'd close this for the 95% profit it's at right now. Do not sit here for another week and a half trying to get this. So get out of this one for about 3 cents or 2 cents, whatever it would be. That's a what? 1650, 95%, $1,650 gain in 2 weeks. Anybody like making $1,700 in 2 weeks? I think I do. And I'm telling you, man, the financials are just they're the gift that's going to keep on giving in 2018. PLTB update, JP Morgan, March 9, was it the 109, 108 bull put spread close for try and get 2 cents, 2 cent debit to get out of it for a 95% 1650 gain. Awesome. Very happy with that one. Yeah, we'll look at another front one. JP Morgan's on my list, but let's just cover portfolio positions. Okay, that was 13 Feb. Brazil. Carnival. So the 43, 42 and a half out to Friday. This one, I believe, this one is going right down the fairway as well. Look at that. 43. Where are the strikes again? 43. 43, 42 and a half. 43, 42 and a half. March 2nd. It's not even on the options chain. Can you say max profit? 42 and a half. 1 cent. Bam. Let me get a hell yeah if you made $2,100 in this trade. This is a 95% winner. God, man, I got to take a break. I'm actually going to Aspen for spring break in a couple weeks, and I am taking the week off. I am doing 0 trades, and in the 8 years at TGO, I've never done that. I've always done webinars. My kids going skiing. I have to meet them. We're done. With the amount of money we've been making, guys, it's disgusting. So that's a $2,100 gainer since 6 February. So that's what, 3 weeks? What's it? 1, 2, 3, 3 weeks. Yep. Sweet. So the 43, 42 and a half, I'd close that one out. PLTB. Oh, I didn't hear that, Mark. Wiz heard Mexico will now start buying grain from Brazil. Wow. Sorry, Wiz, I disagree. Nothing disgusting about it. Exactly. I won't break anything, man. I'm too old. I usually half-day ski anyway because I'm an old man. What week? When am I out there? When's spring break? The 17th to the 24th. I think I'm out there. Yeah, 17 to 24 out in Aspen. PLTB update. EWZ close the March 02 43 42.5 bull put spread. If you can, you might have to pay to get out of this at a penny for a $2,100 95 profit in 3 weeks. Closing trades, kicking ass, and taking names. Oh. Okay, well, people will figure out it's EWZ. And if they don't, they're mental. Amazon, another bull put spread, the 1370, 1365. I think we talked last week about closing this one out, right? Or no, I said this was a hold. Wasn't that? I said, no, this isn't getting greedy. This is a nice, look at this one. The 1370, 1367 and a half. That's not even, that's stupid profitable. $3,000 in 3 weeks. So let's pull up our Amazon, March 2nd. I can't even get these strikes. 1370. Let's find the 1370. Jeez, let me keep scrolling down. I told you, folks, maybe somebody will listen eventually and get long Amazon. I know some of you guys have 1367 and a half. It's at a penny. Woo! Let me get a hell yeah if you're in this one and you're up. What's that? You're up $3,100 in this trade in 3 weeks. I think we just closed 3, 2. That's 5. That's 7. Over $7,000 in profits. That's not including Friday's expiration, which was about 10 between a couple trades. All right, I'm getting all my text alerts, which is good. Wow, awesome. So one more text to get out of that one. 1370. Whew, man. Primary lab trade briefs, PLTB update, AMZN, close March 02, 1370, 1367.5, bull, put, spread again. You might have to pay up a little to get out of it for a penny for a, what's that, 3,100, another 95% or 95% profit in 3 weeks. Wow. We are printing money. Tamara, I've been doing 2 double verticals a week plus credit spreads each week. I will let you know tomorrow what my Feb total is, my profits. It's a whopper. Congrats, Tamara. That is awesome. Ray, Wiz, good day to sell VXX bear call spread. Wiz, VXX up nearly 7%. Good day to sell. Yeah. Oh, you posted that twice. Well, John, if you have to pay up too much, then maybe you hold the trade so it expires worthless, but you run the risk of some crazy event hitting you, right? Exactly, Graham. The U.S. Mint wants their printing machine back. But I don't pay up too much. If it's going to cost me too much to get out of a trade, John, sometimes I'll take it to full expiration as long as my strategic mindset and my commit criteria. Harry, somebody pointed that out to me. If there is no such position in our portfolio, I'm not going to send out a correcting text. People hopefully can use their thinking brains and know that was EWZ. You'd be surprised though. We got some real keepers. When we're done with, we were looking good. And then we start getting into our volatility trades. So holy crap, man. What a great February in the primary live trade brief portfolio. What a freaking phenomenal February. And you might have heard some people yesterday bitching about February. This was cash money right here. I loved February. And that's not even talking about, trades from our other portfolios and our volatility trade. The only wart, so to speak, recently is bailing out of that dead money in GE. So best all time. Yeah, Fish. This has been an epic 2 months, and then we've been hitting the shit off the ball since the fall, man. Wow. I love hearing people. Oh, it's hard to trade this market and this stuff. I'm like, life's tough. It's even tougher if you're stupid. So. Okay, let's get again. We're in a target-rich environment. We're all. Do you have CS on Visa? What's CS? Visa's not in this portfolio, so I'm going to pass on Visa. I'm going to stick with what's in this portfolio, guys. MGM, guys. One more time. This is the primary live trade brief portfolio. If it's not in this portfolio, I'm not going to talk about it because I confuse people. Some people, I'm not going to take up 10 to 15 minutes on a trade that isn't in this portfolio when they are paying for the service. So there is a lot of opportunity here. And Amazon obviously is always a great opportunity. Let me pull up Brazil real quick. We can always get back into or keep going with our Brazil trades. This is just a normal, that's a nice climb schedule. Just like it's got good climb schedules, a little bit of a pullback, good climb schedule. So I'm probably going to maybe just sit on my hand a little bit in EWZ because that's also commodities, and an oil play. Kevin, yes, max value equals subscribe to all the services. Kevin, you said it, not me. I try and tell people that, and you need to be in max afterburner, folks. If you're full throttle, if you're in options weapons school, OWS, you're not getting access to everything. If you're in full throttle, offensive or defensive, you're not getting access to everything. You need to pick up the phone or call Susie or shoot an email, and you need to be in max. So you're in all of the portfolios, folks. And I know a couple people over the past couple days she's working with to upgrade you guys. So Harry, I've been using about $1,200 a position, and all my overall portfolio is up almost 20 grand. Killer month or killer year. Yeah, exactly, Harry. When you talking to your John, thank you. Lifetime is even better. Okay. Jan, can we members have privy to your different portfolios? Jan, that's what I just said, man. You have to be a full throttle max member to get access to all of the portfolios. John, put people who mix the portfolios in the penalty box for a month. Exactly. You better twist your wife's arm there, Harry, because when they go up, you're gonna be down $2,500. So everybody, look what John said. John got a deal on his lifetime membership. It's going to be a deal because they're going up with performance like this, guys. Those lifetime memberships could cost $20,000, $30,000, $40,000. I'm not kidding you, man. Based on what some of our competitors who actually suck at what they do are doing. Somebody told me they got a call from Option Animal the other day. What a ship of fools. Ask them what their performance is, guys. Kevin, yes, lifetime is the best deal ever. Somebody said more roses, Harry. Okay, JP Morgan is also a nice target of opportunity. The financials are going to be doing great. This is his one there. So 115 was resistance. 115 has kind of been a little bit of support, resistance, and now we're getting a little bit of a rise. The fact that it's just kind of languishing today is bullish. I love JP Morgan. We're probably going to stick with the JP Morgan bull put spread here. But you look at a lot of these symbols. VXX, I absolutely would be doing a bearish spread on this. This is my prediction, guys. Spike, dead cat bounce, dead cat bounce, dead cat bounce, and this thing is down here in a couple weeks. So yeah, this little bit of a spike in volatility is exactly that. Let's take a look at VIX. So it's a target rich environment. Same looking chart right here, right, folks? Spike, give back, down. Yeah. So that's what's going on. But let's stick with JP Morgan since that's a big position in this portfolio. So this is a yes, guys. You need to have on a Jan 20 JP Morgan. Okay. It's a great financial stock. As I've preached numerous times, with interest rates going up, financials will be like a pig in shit. They love rising interest rates, and banks are just going to. That's not even including the Trump tax reform, right? It's the gift that keeps on giving. Yeah, Brian, or Morgan Stanley. But I'm always, for now, I'm going to default to what my gold medalist is in that division, right? In our sector brief, Raytheon for defense, JP Morgan here for financials. So check this out. So we talked about expiration selection. How far out do you know to go? Well, I will tell you that I don't think that this is going to do one of these. I do think we're probably going to chop, here's a better term. We're going to grind higher. Okay. And then get, because this was just that's stupid. I think we might have a little bit of a pullback. We might test the 50-day, but the fundamentals are strong, guys. We go higher. And the reason I like an Amazon for like a weekly trade is it's its own stock market. The S&P could be down 50 points and Amazon's up $100. So we're done trading SPX for a while. This is an ugly chart to be trading SPX. It's gambling. The other reason, well, Wiz, if you think the market's going to maybe come back down to this 50-day, why would you be bullish on? That's exactly why I'm bullish on JP Morgan, because the financials are going to be the place to be. It's all, I'm not going to use this term, a flight to safety, but money is rotating into the financials, folks, because people get that interest rates are going to be going up. Okay. So I like the 115, and I feel, why was I, you bet, Charles. You know that I have been keeping my leash tight, but now since my strategic mindset, cautiously bullish, folks. Ring the bell, game back on. We've hit the 50-day with some airspeed. I don't think we're going to do that Morgan Stanley, retest, and this is the appetizer and all that crap. So. Hold on one second. Okay, one second. All right. So I'm going to go out a little bit. I feel comfortable letting my leash out. I'd probably say to the end of March. Maybe even the 29th. So letting my leash out means, when the market's pretty volatile, I only go out a couple weeks, man, because it's like, holy crap, the world might be over, and let's keep the leash tight. With the world not being over and me back to being cautiously bullish, I think we can probably go out further in time. Okay. Giles, infrastructure, gold metal stock. I like CSX. That's the one position we have on as far as infrastructure. GE was going to be my other one, and that's dead money. Folks, GE ain't going out of business. It might get delisted and all that stuff. It's dead money for now. It might go up over time, but why just sit here and wait for it to go up? So I'd say CSX. But let me finish this trade. Let's get bullish on JP Morgan. I like Caterpillar. It's way over its ski tips right now compared to a CSX. Okay. So I picked our expiration. I picked our strikes. So let's go ahead and build the trade. Let's go out to the 29th. And I said the 115, 114. Bull put spread. Let me see how many we can do here. Wow, that's pretty. Now we might have to go up a little bit. Even that far out, that's pretty crazy. Well, the pricing in these options and the spread should tell you that the market is bullish on the on JP Morgan in the future here. That's great. Let's take a look at the metrics. Probably maybe 85. Yeah, 80. If I want to be right around our SOP. And as I'm talking, this thing's already going up. It was all right. What's mid market, guys? This pricing sucks. Kevin, spring break has zero impact on trades in my experience. Okay, I'm seeing mid market of about 50 cents. Okay, good. You guys are seeing that too. All right, here we go. I'm going to sell 80 of the March 29th. I explained why. Of the 116 strike, I explained why. Puts. As a hedge, in case I'm wrong and the financials suck, or the Fed says they're not going to raise interest rates because things suck, the financials are going to get hammered. That is not going to happen. That would be a black swan event that I just think is physically impossible. As a hedge, I'm going to buy 80 of the downside puts, the 115s. So I'm bullish, or at least neutral on JP Morgan. I think we make money if this trade goes up. trade sideways, and even can go down a little bit. So I'm bullish. I'm using puts, and the strikes are spread apart. Bull put spread. It is also called what? A credit spread. We are getting paid to do this. We're bringing in a credit of 51 cents. Remember, just like the Ferrari dealer down the street here in Fort Lauderdale, we want all of that. We want every one of those 51 cents, right? We want this essentially to go to zero. I have no idea what's going on with the pricing, but it was 50. We want this to go. We want the entire credit in our pocket. If it starts going up from 51 to 61 to 71, 95, that's bad. That means JP Morgan is going down. Okay. So we want this credit to go to zero because that means JP Morgan is going up. Or over time, it could be staying level, and we'll be getting all those credits. Okay. That makes no sense that the price dropped like that. Everybody's still seeing 51. What? God almighty. TradeStation, E-Trade. Can we find a good broker? How the hell did? Yeah, everybody's saying I moved the market again. Now it's 21. That's okay, guys. Is there a market maker listening to my briefs? It should not be going down. That credit should be going up with the stock going down. Something's fishy going here. You guys are seeing 28. Well, good old E-Trade pricing was completely wrong. Well, now I'm going to have to go down to what I originally thought it was, 75 contracts. We might have to go up to 117. I mean, the options pricing is telling us that the options market is bullish on JP Morgan. I'm obviously Yeah, I saw that fish. He told me he had just landed and getting in some powder. Yeah, Tamara, trust me, we're both trying to find good places for everybody to go there. So, something's going on. No, I don't think it's any of that stuff. Let me. No, I mean there ain't massive open interest in volume here, guys. I mean there's more than the other strikes. If you guys are getting into this, we are moving in a little bit. Where's the different exchanges? There's really not that much size here either on these different exchanges. That's interesting. I mean, is he still talking or is he done? Well, let's go with this. This is the more. Let me go with the more aggressive trade. So no, I didn't see any announcement. I'm not seeing any on the financials. I'm going to run with this one. I'm going to sell 75 of the March 29th 117 puts, and I'm going to buy as a hedge the 116s for about 32 cents. So let me grab a screenshot of that. JPM desktop JPM 227. Okay, got a screenshot of that. Yeah, exactly. All the traders are just getting back from their tin sandwich lunches. 31 cents. Let's grab a screenshot of this. And I'll throw the Amazon trade in the replay, obviously, from yesterday. I didn't get a chance to send that out. But everybody is getting text, so that's Sorry about that. Sam says, Wiz, you taking JPM? What if market corrects next month? Sam, we trade it. I'm not sure what your question is, man. The market, we had a formal correction last month. We were down 10.2% or 11%. We traded a correction last month, and between the portfolios, we made over 40 grand in a correction. So, Sam, not sure what your question is. You manage the trades. I don't. Yeah, I'm taking JP Morgan as a bull put spread. You're asking what if the market's down next month? I don't think it's good. I spent a lot of time today, Sam, talking about how I believe my strategic mindset is cautiously bullish, that we're heading up. I don't think, Sam, if you disagree, you can always take the other side of my trade and do a bear call spread on JP Morgan. I think you're going to get run over. Remember, guys, I said, look at how JP Morgan held up during the quote unquote correction, folks. What did JP Morgan do? Nothing. There's the 10% drop in the S&P 500. What did JP Morgan do? Nothing, guys. Why? Because if you believe that part of the pullback was because of interest rates maybe going up, that helps financials. You want to be in a JP Morgan. So I don't know if that answers your question, Sam, but should we not take JP Morgan as a bear call spread? God almighty, no. I would not be doing a bear call spread on JP Morgan, man. I think I just answered that. What stocks, as the world ended and people thought this was the big one, what stocks caught a bid? Financials, guys. Dude, Sam, watch the replay, man. I can't spend too much more time. I think I've spent a total of 30 minutes explaining a lot of this stuff. So, no, I would not take a bear call spread on JP Morgan. Absolutely not. Yeah, no way, man. You will get run over. You might be right. There might be a correction and all sorts of stuff. I don't see that happening at all. It already happened, man. I think we had our pullback for the next couple months. So, all right, since this is weekly, there's weekly options folks in here too. I'll send you guys this text as well. PLTB, new JP Morgan bull put spread. $75 contracts, March 29 expiry. I'm going to sell the 117 puts. Those are the higher strike. And as a hedge, I'm going to buy the 116 puts at a 32-cent credit. Plus or minus probably about 3 cents. So that means I'd look to adjust if the trade goes up to about 57 cents and maybe eject if the trade goes up to about 64 cents. Okay. Sam, market at all-time high and next earnings is April. So my thought that we may have some sort of pullback before well, your first statement's incorrect. The market is not at an all-time high. The market was an all-time high right there. This is not an all-time high. That is. And this trade is out to March. You said earnings are out here in April. So that's why I let my leash out to about there and not into earnings season. So market's not at all-time highs currently. But if you want to get bearish, Sam, I mean, Morgan Stanley thinks that little pullback, or not little, that 10% pullback was an appetizer. They might be right. Arthur, Wiz, you seem to ignore Bank of America and it has been doing well and is recommended by the brokerages. Why do you not like it? I've never said that, Arthur. I never said I don't like Bank of America. I don't trade it. I'm a Morgan Stanley and JP Morgan guy, and Goldman Sachs used to be my bronze medalist, and I actually said Citi or Bank of America would be my bronze medalist. So, Arthur, I don't trade stocks I don't know like the inside of the back of my hand. I used to do that for Goldman Sachs and then moved on over to JP Morgan. I just don't follow it, man. I think it's a good stock, but I don't know. Folks, it's like counting cards. Not that I know how to do that or have ever done that or do that today. Folks, if you're a card counter in Vegas, you don't walk up to the table, sit down, and put 10 grand down on your first hand, do you? What's a card counter do? He or she walks up and stands behind everybody drinking and losing money, and you get a count. You count the deck. And when it's time to enter, you sit down and you make very, very educated trades. So I would have to follow Bank of America for about a month in order to be considered pretty damn good at it. So I've never said don't buy Bank of America. Absolutely not, ever. I said Citi or Bank of America would be my bronze medalist after I booted Goldman Sachs. That's what the hedge is for, in case. Yeah, exactly, Matt. Yeah. No, I mean, if you believe we're going to see another pullback, if you believe in Morgan Stanley's call that this is a massive dead cat bounce and we're heading back down, go buy some cheap FPY puts. Robbie, for JP Morgan bears, even if there is a little backing and filling with JP Morgan, that doesn't mean you should do a bear call spread. The backing and filling will probably be small in nature if it happens. Robbie, I agree with that. Sam, almost all-time high. NASDAQ at 7,500 all-time high. Okay, awesome. SPY almost all-time high. So, Sam, I'm not getting your point. People who, again, markets, you don't know something's at an all-time high until when it does this. So what if it kept doing that, or what if this keeps doing that? Okay, you don't want to, FOMO, right? Fear of missing out. If you're Sam, if your strategic mindset is contrary to mine, that's awesome. I appreciate spirited debate and conversation. If you believe, like I'm not going to brief it again, but I already up here, man. BlackRock said rally on. Morgan Stanley said this pullback was an appetizer. So Sam, if you believe that this is one of the largest dead cat bounces in history and we're going to get lower, by all means, sell the shit out of this market. Sell bear call spreads, sell buy puts, do whatever. I think that is nuts. There is nothing fundamentally wrong with this market, and this pullback for the 90th time was people who were short vol. So Sam, what in your opinion is going to cause this market to pull back? Just because we're at all-time highs? Who cares? We make more all-time highs. Sam, from past I've experienced markets do some pullback before the next earnings. Guys, I got to be honest with you. I said this the other day. I will say this again. This is not your father and mother's stock market. I can't stand when people sit here and go, well, this is like 1987. I'm like, it is? I need to part my hair down the middle and graduate from high school. This comparisons to any other market condition in the past is ludicrous. From the Trump tax cuts to technology improving, using Moore's law, to a dude launching his own rockets into space with a car in it. This is not, I would not use old market, man. And by the way, let me give everybody a little bit of a history lesson here. What happened in 2009? What happened in 2009? The Fed put a put under this market, didn't it? The old Fed, instead of, you guys can look back to my writings or the Options News Network. I wanted to let this thing burn. Shit needs to fail. Not everybody gets a trophy. And the kids that aren't used to getting trophies and get hit in the face with real life end up shooting up schools, right? Things need to be able to fail. So years ago in 2009, the Fed, Ben Bernanke, got involved in capitalism and was pumping $85 billion a month into this market. Can anybody tell me if that was going on in 1987 or in 2000? It would have been unheard of for the Fed to step in and save capitalism. So I am not a comparisons to past markets guy. That makes zero sense to me. None. Well, we saw a triple top in 1987 and X, Y, and Z happened. Seriously? Gorbachev, Reagan? That makes no sense to me. So, but if it makes sense to you, awesome. So, I mean, that's so. Lisa, I understand the bear trap feeling. I pay for this service specifically because I tend to always be a bear and need you to talk me off that ledge to disaster rarely, if ever, makes me money. Lisa, I got to be honest with you. If you were here for a couple years under the Obama policies and Obamacare and stifling regulation, I thought the market should have been at zero. GDP, the guy never once had a quarterly GDP print of 3% or annual, whatever it is. Look at this shit. We're talking, I have already predicted 4.5% to 5% GDP this time next year. So Lisa, I was like you under Obama. I'm like, man, I was perma bear, but I didn't. You have to trade the market you have, not the one you want. Not that people want down markets, but you can't. It's like flying in the Hornet, folks, in clouds. Your ears tell you one thing, right? The fluid in your ears says, oh my God, Wiz, you're upside down. It's called vertigo. I don't believe the fluid in my ears. I look at my instruments. So, folks, you have to look at the market instruments and not necessarily how I feel this market should be going lower. Well, how did it feel to be wrong? Yeah, every once in a while you'd be right when the market pulls back, but it was a buy the dip moment. So, Werner, Wiz, you said last week that you seldom make spread trades with a $10 spread. What's your reflection here? I'm not sure what that means. What's your reflection here? I still don't like spreads with $10 wide. I think we were talking about Raytheon. It's just the risk to reward. I just don't like it. Doyle, I saw that the president's already announced that he's running for president 2020, and he already named his campaign advisor. That should provide some stability to the market. The market, I don't care, you love, you hate this guy, whatever. The market loves this dude. It didn't love, well, of course, all the smart money said the market would love Hillary, and they were wrong, and we were right. So yeah, he already announced he's going to run. So you're right. That will provide a little bit of stability there, because people thought, there's a headline on here that says, according to his campaign promises, look at this. He's almost done. 64% of what he promised to do, he's gotten done. Love it or hate what he did, the guy got elected and he did what he said he was going to do. So that's why I thought he was going to maybe be a 4-year president. I thought he wasn't going to run for re-election just because he's like, I'm good. Now I'm going to use my fame and make even more money on Wall Street. So, Fish, we're here to make 75% money on our trades. So following listener, yeah, there you go, man. Harry, market down 142.13, something changed from an hour ago. I don't know. The Fed, they might just be digesting the Fed. What he said. Sessions announces this day, Department of Jury will look into the various prior administration that may. I don't know, guys. Hillary Clinton's never going to jail. Obama's never going to jail. We know they were both dirty. The Clinton Foundation and her State Department had a revolving door between the two. It's disgusting. The whole Clinton, Beverly Hillbillies and the Obamas, they never thought they'd get caught. They were all convinced Hillary was going to win, and all this malfeasance and using bullshit evidence to lie to a FISA judge. To get a warrant to spy on an American. It doesn't get more. You want to call somebody a Nazi? That dude ain't a Nazi. Those people are. Let me use some trumped up evidence. Let's not take seriously some calls to the FBI about people going to shoot up a school, and let's commit treason. I can't stand this. Awful. How about Sam? How about a trade on Tesla? Nope. Or Amazon. We have a trade on Amazon, man. It's a weekly options trade, and we just closed a bull put spread on Amazon. So we're good. We have a JP Morgan trade, and it's almost time to wrap up today. I mean, guys, we're seeing a little bit of a spike in volatility. I'd sell into it. I would sell. Volatility reverts to its mean, folks. If you're not in a bear call spread on VXX, today would be a great day to add that one if you didn't get filled. right? This volatility goes down, folks, until it goes up. I mean, look at this chart. Here's all the short volatility people picking up their dimes. Oh man, I'm the smartest guy at the cocktail party. I'm broke. So volatility is going to come back in, and I think it's going to continue to come back in. So I would absolutely look at a bear call spread on VXX. I think that's a decent trade. John, I'm thinking about doing that. Yeah, I'm not a man that likes to repeat himself over and over and over again, but that's also why these things are recorded. So we'll go ahead and do it. David, 3.2 or 3.9 for what? 3.2 or 3.9? Is that a question, a statement? Not sure. Anything else, guys? Oh, VXX. No, we sent out one. Didn't I send out one last week? I do right at the money here, man. I think we have an existing one of these in another portfolio. Vol's going to come in quicker than it'll go up. So I'd go. I wouldn't do a weekly necessarily. Right now, I'd probably go out another week. So we already have one in a different portfolio. So yeah, I wouldn't do a Friday. I'd go out one. So, but yeah, good stuff, man. Wow, that's a lot of money, folks. And I'm going to remind you that, like 3 or 4 years ago, there was a month I couldn't hit the broadside of a barn. I don't think it was a month, but we have been printing money, ladies and gentlemen, and it has been awesome. There's been a couple misses. There was a random Tesla in here or an MGM, one of the MGMs that went bad. I think ExxonMobil hit us once, but folks, net, this thing is absolutely destroying it. Sam, I do not trade SPY. Sam, you got to watch recordings, man. I do not trade SPY. I trade SPX. I'm not your tax advisor. I'm not your accountant. I don't play one on TV, but there is different tax treatment between trading that and trading this. I will leave it at that, Sam. You can call your broker. You can get in the ready room. You can talk to people, but I don't do that. No, Sam, I said earlier, I'm not trading SPX right now just because of all this. Especially for the weeklies, I like Amazon because SPX can be down 15 points in the blink of an eye, and Amazon might even be up a little bit. So I haven't done any SPX trades lately. We did super SPX trades. When you see this type of stuff, I just sit on my hands. So I don't have an SPX trade for you. I don't, and here's why. The one half of me thinks we probably come back to the 50-day and test it and then go higher. And then the other half of me says we might level up here a little bit and go higher. If you are looking for an SPX trade, I'd be looking at a bull put spread at the 50-day moving average. But folks, I predicted this. I said when you hit these moving averages, they go up, down. You trade around them. So if you're really, really, really bullish on SPY, I'd look at a bull put spread at the 50-day. Does that make sense? So, okay. Yeah, exactly. Tamara, if I need to buy some disaster puts on SPY, I use that, not SPX. Sam, Tesla or Amazon? Did you type that again? I said no to Tesla, and we have Amazons. We have a weekly on right now, and we just closed one for a $3,100 profit. We closed in this webinar, 3 and 2 is 5. We closed over $7,000 in open trades. So I think we're looking pretty damn good. So, all right, guys. Hey, I don't know. I don't think we're on tonight. I think we're gonna let's plan on sliding the. Let's do tomorrow night. No, I got a networking thing tonight. So let's do bullish double verticals tomorrow night, and then we'll do another one Thursday night. So take the night with pay, so to speak, like we say in the Navy. Take the day with pay. Take the rest of the day with pay, and we should be good to go. Have some great looking trades, and I'll see many of you guys tomorrow in accelerated retirement. Okay, all right, guys. God bless, and I'll talk to you later. We'll see you.